Hello everyone, I am Mubashir Qureshi, and today we are going to learn about organizations and types of organizations. Okay, so at the end of this session, you should be able to define an organization, and you should be able to differentiate between public and private sector organizations. You should be able to differentiate profit and non-profit making organizations, and you can explain the features, advantages, and disadvantages of different business organizations, such as sole traders, partnership, and company. So why organizations are established? So organizations are established to achieve specific objectives. Okay, and for example, Tesco is established to generate profit. Different non-profit making organizations are established, for example, charities. And the main reason to establish these charities are to provide some sort of benefit or some sort of support to the communities. The organizations can be divided into public sector and private sector organizations. Public sector organizations are controlled and funded by the government. And these public sector organizations are established because they are providing essential services to the communities or to the members of society. For example, educational institutions, police, and NHS. So these organizations are providing different support to the members of the community. The public sector organizations are normally owned and provide funding by the individuals or by the members of society. And these private sector organizations can further subdivide it into profit organizations and non-profit making organizations. So what is a profit organization and what is a non-profit organization? So that is the next question. So profit-making organizations are established to generate profit. Or you can say business organizations are established to generate profit. And the examples of business organizations are sole trader, partnerships, and companies. These are the types of the business organizations. And if we talk about the examples of the business organizations, then these are Tesco's, Apple, BMW, all of them are business organizations. And these organizations are established because profit can be generated. The non-profit making organizations are established because they provide specific objectives to the members. And the example of non-profit making organizations are charities. So now we have a quiz. Which of the following is a public sector organization? So option A is a sole trader, option B is partnership, option C is a company, and option D is the National Health Services. So what do you think? Which one is the correct answer? We discussed a couple of minutes ago that private sector organizations are financed by the government. So here, if we see the four options which are given to us, then the correct option is NHS. So that is an example of public sector organizations. The other three organizations are private sector organizations, and these are the categories of business organizations. Okay. So we have another question. And which of the following is a private sector organization? Option A is McDonald's. Option B, NHS. Option C, London Metropolitan Police. And option D is government-funded schools. So what do you think? Which one is correct? So I hope that you said A. So A is the example of a private sector organization. So McDonald's is a private sector organization. It is a company. What is a company? We will discuss about that in few minutes. But McDonald's is a business organization. It is a company as well, and it is established to generate profit. And normally, private sector organizations are established to make profit. So A is the correct answer here, which is McDonald's. So now the next topic is the type of business organization. As we discussed that there are three types of business organizations. These are sole trader, partnership, and companies. So now I am going into the details of these business organizations. So I am starting with the sole trader. So what is a sole trader? So sole trader business is a business which is financed by only one person or which is owned by an individual. So one person, an individual, has provided the funds for that organization. So he is the owner. There is only one owner. So, and that is the person who has invested funds in the sole trader. So there are different features of sole trader business. The first one is same, that only an individual has provided funds for the organization, for that type of business, you can say. And because only one person has invested money in that business, so that sole trader has a sole right on the profit of the organization. So whatever profit the sole trader has earned, sole trader has a right on that. So he is the only person who can get that profit. And the sole trader has the right to participate in the affairs of that business organization. Even he has to manage the affairs. He has to work. He has to take all the operational decisions for that organization. The liability of the sole trader is unlimited. So what is the meaning of unlimited liability? It means that the sole trader is responsible to pay for all the losses of the business organization. So whatever is the amount of loss, sole trader is responsible for all these losses. And the sole trader need to pay the tax. So business has no tax liability. The income which is generated by that business organization, it is treated as the personal income of sole trader. And that sole trader need to pay taxes on the earning which he has generated from the business. So the businessman need to pay tax while business has no tax liability. Why? Because the business is not considered as separate from the owner. Okay, the example of the sole trader business are the off-license shop, these corner shops. These are the examples of the sole trader. Okay. So advantages and disadvantages of sole trader. So there are different advantages. For example, it is very easy to start a sole trader business. There are no legal formalities which sole trader need to complete. There is complete privacy because there is only one owner. He has to manage the affairs, so he has the complete information about the affairs of the company. That person has to manage the affairs of the company, so he has the complete control on business. And as I said, that there are very low startup costs because that sort of business don't need to complete legal formalities. The next point is legal formalities. So no legal formalities. So that is why it is very easy to establish that sort of business organization, and that is an advantage. The sole trader has a sole right on the profit of that business, and that sole trader is the boss, so he can control everything. He has a control on everything. So there are some disadvantages of the sole trader. Short life, that is the first disadvantage. So that business has very short life. Why? Because the ownership cannot transfer to another person. It is very difficult to generate funding for that business. Why? Because there is only one person who is investing money. So this type of business always in need of the funds. And the businessman is under immense pressure. Why? Because he has to manage all the operations of the business organization. And sometimes it is very challenging because there is only one person, he has to manage everything. And sometimes it is very difficult for him to manage all the operations. And that sort of business has to pay higher taxes. Okay, the rate of taxes is quite high. If the earning of that business is higher, then that businessman has to pay a higher amount of taxes. Another disadvantage is unlimited liability, as we have discussed before. So if there is any loss, then the owner need to pay for all the losses. And this business is highly risky. Why? Because of the short life, because of difficulty in generating the funds, because only one person need to manage everything for the business. So that is why this business is quite risky. Okay. So now there is another quiz. So sole trader is option A, the business owned by one person. Option B, the business has one customer. Option C, the business employed one person. Option D, the business is financed by debts only. So what do you think? Which one is the correct option? So I hope you are correct. It is option A, that this business is owned by one person. So option A is the correct option, correct answer for this question. Okay, now I am moving to the second type of business organization, which is partnership. So what is a partnership? When two or more than two peoples are coming together to start a business, then it is known as partnership. So maximum number of partners is 20. Okay, so the owners of the partnership business are known as partners. So these partners have the right to involve in the operations of the business, and it is their responsibility to perform all the operating activities. The main features of the partnership business are the partners have the right to involve in the operating affairs of the organization, even it is their duty to work for or to manage all the operations. At the end of the year, the partners have to share the earnings of the partnership business. And normally that partnership sharing ratio is decided among the partner before starting partnership business. So at the end of every year, they use that partnership sharing ratio to share the profit of the business. That profit sharing ratio can be linked to the amount of investment, but it is not necessary that the profit is shared based on the investment of the owner in the business. So it depends upon the mutual agreement between the partners. The liability of the partnership business is unlimited. So again, the partners are collectively responsible to pay for all the losses of the partnership business. And partnership, partnership business and partners have the same legal status. So that is why partners need to pay taxes on their incomes that is generated from that partnership business. So partnership business has no responsibility to pay any tax. So the total profit which is generated by the partnership business, it is distributed among the partners, and after that each and every partner need to pay tax on their personal income that they have generated from that partnership business. And the example of the partnership businesses can be a firm of accountant or a firm of solicitors. Okay. So advantages and disadvantages of partnership. First of all, I'm going to discuss the advantages. So a partnership business can raise more funds than a sole trader. Why? Because there are more than two people are partners. So when there are more people, so they can raise more funds as compared to a sole trader. The startup cost is also very low. Why? Because there is no legal formality which partnership firm need to complete. So the responsibility is shared among the partners. So that is an advantage. Decision making is quick. There are 2 to 20 partners, but this number is still not very high. So that is why the decision making is quite quick. Partnership business has better skill set. Why? Because there are more than one person. So when there are more people who are working for that business, so more skills are theirs. Okay, and the partners have the right to involve in the operations of the company, so they have all the information about the business. So there is data privacy. And these partners have the control on the operations of the business. So now I am moving on the disadvantage. The first disadvantage is disagreement. There is a possibility of disagreement. So that is a disadvantage. The life is also short for that sort of business because partners cannot transfer their share to any other person. So the tax rate is also higher as compared to companies. The liabilities of the partners is also unlimited. And even though partners are able to raise more capital as compared to sole trader, but still partners cannot generate large amount of capital. So if the partners want to start the business as a very higher scale, at a very large scale, then it is higher probable that they are not able to generate enough funds. So another disadvantage is that there is sharing of profit, because more than two or more than two peoples have invested money. So now they are sharing the profit. So this sharing of profit is a disadvantage. And this type of business organization is also highly risky. Why? Because unlimited liability, because short time, short life, and because of disagreement. Okay, so these are few advantages and disadvantages of partnership business. Now there is another quiz. Which of the following is a characteristic of a partnership firm? Option A, partners cannot involve in the operating activities of the partnership firm. B, partners do not share the profit of the partnership firm. C, partners have unlimited liability. D, a partnership firm is liable to pay taxes. So, what do you think? Which one is correct? Which is the characteristic of a partnership firm? So, I think you have given you said your answer is C, which is that partners have unlimited liability. So that option C is correct, because that is a characteristics of a partnership firm, that all the partners have unlimited liability. Okay, so after that, I am moving to the next type of business organization, which is company. So what is a company? So the first and the most important point is that the company has a separate legal entity. So what is the meaning of separate legal entity? It means that company is different from its owners. So company has separate status, separate legal status, and they are considered as separate from their owners. So the next question is that who are the owners of the company? Shareholders are the owners of the company. Then who are shareholders? That is the next question. So the peoples who purchase shares, they are shareholders. And share is a security. It is a financial asset, you can say. Company can sell shares to the general public, and that is how the company can raise capital. And companies normally start large scale businesses. So that is why companies need huge amount of capital. So the capital or the investment which is required, that is divided into small portions. And these small portions are known as shares, and these shares are sold to the company. For example, if a company is going to start a business organization, and let's suppose that organization need 1 million pounds. So this is a huge amount. So what the company can do, company can divide that 1 million pound of capital, which company need, into 1 million shares. So it means the price of one share is £1. And after that, the company can sell these 1 million shares to the general public. So that is how the company can generate that 1 million pound. And how many people can purchase these shares? So it is an invitation to the general public to purchase the shares. So 1 million people can purchase these 1 million shares. So there is no maximum numbers of shareholders. Okay, but remember, companies are selling shares in the batches, and the shareholder need to purchase a batch. Okay, so shareholders are the owners of the company. So the peoples who want to start the business in the form of companies, these individuals need to complete the legal formalities, the legal requirements. Normally, these legal requirements or legal formalities are given in the memorandum and articles of associations. So once these legal formalities are completed by the individuals, then they are able to create an artificial person. And that artificial person has a distinct name. For example, Tesco, Apple, BMW, Sainsbury's, all of them are companies. And these are the artificial person. But these artificial person has legal status. Okay, so these artificial persons, these companies can start a business on their own names. And these artificial persons or these companies are separate from their owners. So in the case of conflict, that company can sue any other company or any other person by its own name. And the other peoples can sue the company, not its shareholder, not its owner, but they can sue the company. Why? Because the company has separate legal entity. That company has a separate legal status. It is an artificial person. Okay, so that these are few features of the companies. Now, I'm going to discuss few more features that shareholders are the owners. They are investing money in the company by purchasing the shares. And now it is quite easy to purchase the shares of the company. These large banks have, or you can say that they are working as the brokers. And only brokers have the right to buy and sell shares from the stock exchanges, because these shares are traded on stock exchanges. So if any person want to purchase the share, that individual need to open a brokerage account with any broker. It can be these large banks like Lloyd's, Halifax, all these banks are offering the brokerage account. And if you want to purchase here, you need to fill an application form to open a brokerage account. And after that, you will get a username and password, same like the online banking. And after opening that account, you are able to see the share prices. And if you deposit money in that account, then you can purchase the shares. You can request the broker, and then the broker will purchase the shares. Definitely, brokers are charging their commission whenever you are buying or selling the shares. You have to pay the brokerage charge, which is a commission. And that is how you can purchase and sell the shares. So you don't need to go to the stock exchanges now. You can just open that brokerage account and you can see the share prices. And after that, if you want to buy or sell the shares, you can request the broker, and that is how you can buy or sell the shares. Okay, so shareholders are not directly involved in the operations of the company. Normally, these shareholders have the right to cast vote in the directors' election. So the peoples who get maximum votes, they are elected as directors, and then these directors have the right to involve in the operating activities of the company. These directors or board of directors, they need to make the plans, strategies, policies, and they are involved in the decision making of the organization. Okay, so shareholders have no direct right to involve in the operation. Even it is impossible if, let's suppose, a company has sold 1 million shares, and let's suppose 1 million people have purchased the shares. So it is impossible that 1 million people can involved in the operating activities. So it is impossible. So that is why these shareholders, they elect the directors, and these professional peoples, they need to involve in the operations of the company. The liability of these shareholders is limited. And what is the limit? The limit is the amount of their investment. Let's suppose person A has purchased 1,000 shares, and let's suppose the price per share is £1. So person A has invested £1,000 in a company. So his liability is limited to the amount of his investment. So if the company is bankrupted, person A can maximum lose £1,000, his own investment, not more than that. Let's suppose person X has purchased 10,000 shares by investing £10,000. So the maximum liability of person X is £10,000. So the liability of the shareholder is limited to the amount of their investment. And the next feature is that corporate earnings are taxed twice. So as we discussed a few minutes ago, that companies have separate legal identity. So if the company is earning profit, then first of all, company need to pay tax on their profit or on its profit. Then after that, that profit is distributed among the shareholders in the form of dividend. So that dividend becomes the personal income of the shareholders. Okay, so shareholders need to pay tax on their dividend because dividend is a source of income for the shareholders. So now shareholders need to pay tax on that earnings. So that is how the corporate earnings are taxed twice. First of all, company need to pay tax, and then after that, shareholder need to pay tax on the dividend which he has received. Okay, so advantages and disadvantages of company. So first of all, advantage, limited liability. I just discussed that point. Separate legal entity. We discussed that as well, that the company is different from the owners. Long life. And why long life? Because the ownership can easily transfer from one person to another. Let's suppose person A has purchased the shares on, let's suppose, on the 1st of January 2021. And now person A needs money. So what he can do, he can request his broker that I want to sell the shares. And the broker will sell the shares on behalf of the shareholders. So that is how the shareholding can easily transfer from one person to another person. So that is why companies are operating for longer time period. And there are so many examples. For example, Mark and Spencer. I think it is operating from the last 130 years. Debenham was established, I think, around 1890, something around 1890. So these companies have long life. So the next point is easy to transfer ownership. I just discussed that the shares can easily be bought and sold. The corporate tax rate is low as compared to the tax which is paid by the individual. So distribution of dividend. So if the company is earning profit, then that profit is distributed to the shareholders in the form of dividend. Access to tremendous amount of capital. So £1 billion can easily be generated. Why? Because the company can sell shares to the general public. So many people can invest money. And another reason is that £1 billion, let's suppose it is divided into 1 billion shares. So the price of one share is £1. So small investors can purchase the shares. Let's suppose person A has £500 of saving, he can purchase 500 shares. Person B has £10,000 and he want to invest that one £10,000. So he can purchase 10,000 shares. So that is how the small savers, the people who have small savings with them, they can invest money into the companies. And the company can generate huge amount of capital. So professional management, that is the next point. Companies have so much resources, so much capital, so they can hire professional people. Expansion is possible. Why? Because a lot of funds and more funds can be generated if organization want to expand. And the next one is division of ownership and control. As we said that shareholders are the owners, but they are not involved in the operating activities. Who is involved in the operations? Directors, board of directors, who are elected by the shareholders. So that is why there is a division of ownership and control. So now disadvantage, high setup cost. So many legal formalities that need to be completed. So higher setup cost. Instead of the setup cost, normally the companies need to complete a lot of formalities at the end of year. One of the example is the preparation of a full set of financial statement. So I have recorded another video which is related with the types of accounting. And under that video, we have discussed about financial accounting statement. And it is mandatory for the public limited companies to prepare a full set of financial statements at the end of every year. So high setup cost, a lot of legal formalities which company need to satisfy at the end of every year. It is quite challenging to motivate the employees. Why? Because normally the employees are not the owners. When we discuss about sole trader and partnerships, we said that the partners and the sole traders are working for the organizations. But here, the organization or the company need to hire employees who are not the owners. So it is quite difficult to motivate them. Lack of secrecy. It is quite difficult. Why? Because ownership and control is in two different hands, or it is with two different groups of peoples. So legal formality, we discussed this point before as well. Lack of personal interest. The shareholders are the owners, but they are not operating, but they are not involved in the operations. So the board of directors, they have to perform the operating activities. So they are not highly motivated. Why? Because their concern is to get the salaries and bonuses and the perks. So they know that they know that the money is not invested by them. Okay, but one point is very important, that the organization where the rewards are linked with the salary packages, in that organization, the managers can be motivated easily. Why? Because their rewards, their salary packages are linked with, they are linked with the performance. The next point is conflict of interest. Yes, again, because of the separation of ownership and control. So that is the main reason of conflict of interest. And there are so many examples of business organizations which were bankrupted because of corporate crimes, like Enron, WorldCom, and so many organizations which were bankrupted. And the last disadvantage is double taxation. So company need to pay tax and then shareholders. So that is another disadvantage. There is another quiz now. Which of the following is a feature of a company? Okay, shareholders have the right to involve in the operations of the company. B, the shareholder does not share the profit of the company. C, shareholders have unlimited liability. D, corporate earnings are taxed twice. So we just discussed this point. And I think your answer is, you have given the correct answer, which is D. So the corporate earnings are taxed twice. I just discussed that point 2 minutes ago, I think. Okay, so now the types of companies. There are two types of companies. One is the public limited company, and second one is private limited company. So most of the feature which I discussed, they are related, they were related with the public limited companies. And what are the public limited companies? The companies which can sell shares to the general public. So the companies which can sell shares to the general public, these are public limited companies. But private limited companies cannot sell shares to the general public. So that is the difference between the two types of companies. Okay, so that is the end of the session. So the main points are that organizations are established to achieve specific objectives. And there are two types of organization. One are the public sector organization, second one is private sector organization. Public sector organization are controlled and funded by the government, while private sector organizations are funded by the individuals, by the public, you can say. Okay, so non-profit making organizations are established to support the members of society, while business organizations are established to provide or to generate profit for their owners. And the examples of the business organizations are sole trader, partnership, and company. And we have discussed the main features of these three organizations, and we also discussed the advantages and disadvantages of these organizations. So the solution of the quizzes are here. Okay, you can go through these quizzes again if you have any confusion, and the answers are given here. And these are the references. So thank you very much for listening me. And if you have any question, then you can type your question in the comments. I will check your comments, and I will give you the answer. And all your comments are welcome, because definitely they will provide me some encouragement that there are people who are listening to me, and this effort, you can say, are helping them to learn. Okay, thank you very much, and I will speak with you soon. Bye everyone, take care and stay safe. Thank you.